Hello, and welcome to Mind and Money Show, where we talk all things mindset, money management, and our entrepreneurial journey. Along the way, we're going to throw in some amazing guests for good measure. I'm Shane Hyland.
I'm Gareth Shears. This show is going to change your life and teach you skills that school never taught you.
Boom.
Right, we're back to the self-employed professional sports person contractor argument about actually can you get a mortgage. So there's an article yesterday in the Times which said self-employed contractors, even footballers, meet the unmortgage-ables. Interesting one, that. Now, don't get me wrong, those types of jobs are quite difficult, a little bit more difficult to get mortgages for, but it's not impossible. They're not unmortgageable. Now, I think a lot of it comes down to the experience of the broker, not so much the fact you can't get a mortgage. So there's somewhere in the region of between 80 and 100 mortgage lenders in the market. And there's a lot less products at the moment, and there's a little bit more stricter criteria with everything that's kind of going on. But it's not unfeasible that people can't get a mortgage. So there is one of the examples in there talks about somebody on TV that was restricted on what they could buy because of their salary and dividends. Okay, well, that might be with certain lenders, that's correct, actually probably the majority of them, but there are lenders out there where you can use retained profit to get an actual much higher mortgage amount. So I'll give you a good example. So I had a client come to me who'd been to see, I think it was 5 or 6 different brokers, and they were drawing £100,000 from their business, and their wife was employed, so they had a good sort of mixture of income. But the max borrowing they could get was circa sort of 700,000, and they were looking to buy a £2 million property. So we stood back and said, well, okay, well, what have we looked at? Let's have a look at your company. Let's have a look at your company structure. So we looked at the company structure. Okay, that fitted into the criteria to be able to use retained profits. And actually, what were the retained profits? The retained profits were in excess of 800,000 a year. So therefore, with some lenders, we can actually use that 800,000 and then apply the normal 4 to 5 times income multiplier. So for that client to buy a £2 million property was feasible and actually quite easy to do in the end. But like I say, you've been to see 5 or 6 different mortgage brokers. And that comes down to, in my eyes, the lack of experience from the brokers. Now, as a company, we're used to dealing with high-profile sports people, business owners who have very good turnover, actually don't draw a lot of kind of income from the business because they're being a bit more tax efficient and they don't really need it. We deal with a lot of people in TV as well, so we have an understanding of how their income works. So sometimes it's trying to find a broker who actually specializes in that arena, because it's not all the same. And you then kind of know what lenders you can go to, what lenders you can't go to. Because you've got to bear in mind, this article talks about going to the high street banks and things like that. Well, the high street banks are not interested in that. You have got to go to your quirkier kind of lenders. You know, some of your building sizes, actually some of your private banks as well. And they will take a different view on lending, especially when you're in the high ends of income. Now, the article does go on to talk about actually more so the lower level professionals are really kind of struggling to get mortgages. And I can kind of understand that, because then you've got the issue with the post-career, what they're going to do. So the terms are a lot kind of shorter on the mortgage they'll offer. But I think if you look at your run-of-the-mill self-employed and your high-end sports people and people in TV, actually they're not that difficult to get mortgages for, and you're not going to get a much higher rate. You don't have to go to like a lender of last resort, as we used to call them, with extremely high mortgage rates. You are actually going to your normal mortgage lenders and you're getting a normal mortgage rate and a normal mortgage term. There's nothing quirky about it. It's just, like I said, I come back to, it's going with someone who understands that market and who can actually get those kind of mortgages. Now, I've been doing this over 15 years, and I've only actually ever failed to place 3 mortgages in my whole career. And that was nothing to do with the actual profile of the client. That was to do with the fact that the credit was impaired so much that we couldn't place it with a lender. And I don't deal with impaired credit mortgages because that's a totally different specialism again. And I think sometimes you've got to stay in your lane. And if you know that type of business, that's what you kind of do. So of all the mortgages we've kind of done over the last 15 years, and it's a lot of mortgages, we've hit the mark on every single one.
Thanks for listening, and if you enjoyed this episode, then please subscribe and remember to follow us on social media for more content like this.